Hey there, new recruits. Welcome to the exciting world of finance. It's like a vast ocean out there with opportunities galore. Let's start by understanding the two main areas we'll be navigating: public and private markets. Think of public markets like the open ocean. Everyone can see what's happening and anyone can jump in. These markets trade stocks, bonds, and other securities listed on exchanges like the New York Stock Exchange. Now, private markets are more like the deep sea. They're less transparent and involve investments in companies or assets that aren't publicly traded. This includes private equity, venture capital, and real estate. Understanding the differences between these two is crucial for your journey in finance. So buckle up and let's dive deeper. Public markets are all about transparency and liquidity, two key elements that drive the financial world. Think of a bustling fish market, teeming with activity and energy. Anyone can see the day's catch and buy what they want. Liquidity is king here, ensuring that transactions happen smoothly and efficiently. You can quickly buy or sell your investments with just a few clicks. Need cash fast? No problem. Just sell your stocks and access your funds almost immediately. It's like trading your fish for cash right on the spot without any delays or complications. Transparency is another big plus in public markets. Public companies must disclose tons of information about their financials, operations, and future plans. This lets investors make informed decisions, reducing the risk of uncertainty. It's like having a detailed label on your fish, showing its origin, freshness, and quality. Valuation is also more straightforward in public markets thanks to the abundance of data. With readily available data and comparable companies, determining the worth of a stock is simpler and more accurate. Finally, access is wide open to everyone. Anyone can invest in public markets with a brokerage account, making it inclusive and democratic. It's like hopping on a fishing boat. Easy, accessible, and open to all who are interested. Now let's plunge into the depths of private markets. These are less transparent and less liquid. Think of it like diving for rare pearls. You need expertise, patience, and a higher risk tolerance. Liquidity is limited here. Selling your investments can be tricky and time-consuming. It's not like trading your pearls at any moment. You need to find the right buyer, which takes time. Valuation is also more complex. With less publicly available information, determining the true worth of a private company requires specialized skills and analysis. Access is restricted to a select group. These are typically high net worth individuals and institutions. It's like needing special permission to dive for those precious pearls. So far, we've explored the distinct characteristics of public and private markets. Let's summarize the key differences. Liquidity. Public markets are highly liquid, allowing for quick buying and selling. Private markets are less liquid, making it harder to exit investments quickly. Transparency. Public companies must disclose detailed financial information, making them transparent. Private companies have fewer disclosure requirements, making them less transparent. Valuation. Determining the value of public companies is more straightforward due to available data. Valuing private companies is more complex and requires specialized knowledge. Access. Public markets are accessible to a wide range of investors. Private markets are typically limited to institutional investors and high net worth individuals. Section 5. Why private markets often outperform. Unlocking the secrets. You might be wondering, if private markets are so illiquid and opaque, why even bother? It's a valid question that many investors grapple with. Well, the potential for higher returns is a major draw. Private markets can offer returns that public markets often can't match. Private companies, especially those in their early stages, have significant growth potential. These companies are often at the forefront of innovation and can grow exponentially. They're like hidden treasures waiting to be discovered. Investors who find these gems early can reap substantial rewards. But this potential comes with higher risk. The journey can be volatile, much like a roller coaster ride. Another reason is the illiquidity premium. This premium compensates investors for the difficulty in buying and selling private market assets. Because it's harder to buy and sell in private markets, investors demand a higher return to compensate for this illiquidity. This can lead to substantial gains if managed well. It's like paying a premium for the privilege of owning a rare pearl. The rarity and exclusivity add to its value. Moreover, private market investors often have more influence and control over their investments. They aren't just passive participants, they can actively work with company management to unlock growth and value. This hands-on approach can lead to better outcomes. Think of it like being a pearl diver who can also influence the pearl's growth and quality. This dual role can be incredibly rewarding for those willing to take the plunge. Section 6, Tail of the Tape, public versus private market returns. Historically, private markets have outperformed public markets, but remember, past performance doesn't guarantee future results. The Cambridge Associates Private Equity Index, a widely recognized benchmark, has consistently shown higher returns compared to the S&P 500, a popular public market index. But it's crucial to remember that private market returns can be volatile and vary significantly depending on the investment strategy and manager. Section 7. The CPA as your financial first mate guiding investment choices. As CPAs, we play a vital role in guiding our clients through the complex world of investments. We're like their trusted financial first mates, helping them navigate the seas of public and private markets. We need to understand their financial goals, risk tolerance, and time horizon. This helps us recommend the most suitable investment strategies. It's like charting a course based on the destination, weather conditions, and the captain's risk appetite. For clients considering private market investments, we need to educate them about the risks and rewards. We also need to ensure they meet the eligibility criteria and understand the implications of illiquidity. It's like preparing them for a deep-sea dive, ensuring they have the right gear and training. Section 8, Liquidity Check, navigating the tides of private investments. Liquidity is a critical consideration for private market investments. It determines how easily you can convert your investments into cash without affecting their value. Remember, these investments are not easily bought or sold. They often lack the flexibility of public market investments. It's like being on a ship in the middle of the ocean. You're committed to the journey with limited options to change course. You can't just hop off whenever you want. The commitment is long-term and requires careful planning. Before recommending private investments, we need to assess our clients' liquidity needs. This involves understanding their financial goals and timelines. Can they afford to tie up their money for an extended period, potentially 5 to 10 years or more? This is a crucial question. Do they have sufficient liquid assets to cover unexpected expenses or emergencies? Having an emergency fund is essential. It's like ensuring they have enough supplies on board before embarking on a long journey. Preparation is key. Failing to properly assess liquidity needs can have dire consequences. It can lead to financial stress and difficult decisions. Clients might be forced to sell their investments at a loss or miss out on other opportunities. This can be financially damaging. It's like running out of supplies mid-voyage. A recipe for disaster. Proper planning and assessment can prevent such outcomes. Section 9. Success stories from the private market depths. While private markets carry inherent risks, they also offer the potential for significant rewards. Let's look at some examples. Airbnb and Uber are prime examples of companies that thrived in the private markets before going public. Early investors reaped substantial returns. It's like finding those rare, valuable pearls that everyone wants once they're discovered. Another success story is Blackstone Group, a leading private equity firm. They've consistently generated impressive returns for their investors through strategic acquisitions and operational improvements. It's like having a skilled pearl diver who knows exactly where to find the best pearls and how to polish them to perfection. These examples highlight the transformative potential of private markets. But remember, these are just a few success stories. Not every private market investment turns into a unicorn. Section 10. Charting your course. Practical applications for CPAs. As CPAs, we need to stay ahead of the curve and continuously expand our knowledge of investment strategies, including those in the private markets, attending industry conferences, reading publications like the Wall Street Journal and Bloomberg, and pursuing certifications like the Chartered Alternative Investment Analyst, CIA, can enhance our expertise. It's like updating our nautical charts and learning new navigation techniques to stay ahead in the ever-changing financial seas. By staying informed and honing our skills, we can better serve our clients and guide them toward making informed investment decisions. Remember, our goal is to help them reach their financial destinations safely and successfully. Section 11. Final thoughts. Setting sail on your financial journey. Congratulations, new recruits. You've now completed your crash course on public and private markets. Remember, the financial world is vast and constantly evolving. Be curious, ask questions, and never stop learning. Embrace the challenges and celebrate the successes. And most importantly, always prioritize your client's best interests. Now go out there and make waves.